Welcome to Open Enrollment for 2018 Benefits. Open Enrollment is your chance each year to learn about and make changes to your Snyder's-Lance benefit elections. Today, we'll look at your options and the steps that you need to take between November 7th and 21st to get enrolled for 2018. You'll find full details on your plan options, including costs, in the 2018 Benefits Guide. During this presentation, look for an orange circle at the top of each screen. This will tell you the page to turn to for more information on the topic being discussed. As a benefits-eligible employee, you have access to a great set of plans for yourself and your eligible family members. Today, we'll discuss the medical, dental, vision, FSA, HSA, life, and accidental death and dismemberment benefits that require your action each year during the annual open enrollment period. Open enrollment is the one time per year that you can freely move between plan options, set new contribution amounts, and make changes to who you cover. As you look at who you cover, be sure you only enroll dependents who are eligible for the plans. That includes your spouse, children, and legally adopted grandchildren. When you enroll this year, be sure your dependents' information, like their birth dates and social security numbers, are correct, and that your dependents are listed under each benefit that you want to provide coverage for. If you add a new dependent to coverage, know that you may be asked to provide documentation that proves their legal relationship to you during random audits throughout the year. You can find details on page 3 of your benefits guide. Now that we know who you can cover, let's look at the options available to you, starting with one of the most important benefits decisions you can make each year: which medical plan to choose. In 2018, you'll continue to have your choice of two familiar options for medical insurance: the Blue Options PPO and the Blue Options HSA. Both are administered through Blue Cross Blue Shield of North Carolina and come with prescription drug benefits bundled. They both cover preventive care, like your annual wellness physical at no cost, and both plans have out-of-pocket maximums to protect you financially in a worst-case scenario year. The Blue Options PPO plan is a more traditional medical plan with relatively low deductibles. For 2018, the deductibles are set at $1,000 for each individual on the plan and capped at $2,000 for a family unit. You pay copays for common health care like office visits and prescriptions, and then for more major care, the plan shares in the cost after you meet your annual deductible. On a per-paycheck basis, it is the more expensive of the two plans. The Blue Options HSA is a qualified high-deductible health plan. You still get 100% coverage for qualified preventive care, but under the Blue Options HSA plan, you have a higher deductible to meet before the plan starts to pay for non-preventive care. If you cover yourself only, you are responsible for the first $1,600 in eligible charges, and if you cover yourself and a spouse, child, or family, your family unit has a shared $3,200 family deductible. Until your deductible is met, you pay the full cost of all care. That can be a little or a lot depending on where you go and what types of healthcare services you need. A generic prescription may only cost a few dollars, while a medical test could cost a few hundred. Because of this, what you pay for coverage out of each paycheck is less than with the PPO plan, and you can open a tax-free health savings account that the company will help you fund with up to $1,000 per year. A side-by-side comparison of the two plans and details on the health savings account are available beginning on page 5 of your 2018 benefits guide. If neither plan is right for you, you do have the option of declining coverage. But if you do this, remember that the Affordable Care Act's individual mandate requires that all Americans have minimum essential coverage or face paying a penalty. Minimum essential coverage may be found with your spouse's employer, the insurance marketplace, or federal programs like Medicare, Medicaid, or TRICARE. When deciding between the plans, it's important to look at both the plan design, meaning these deductibles, copays, and out-of-pocket limits, and at the plan costs, which you pay via payroll deduction. Let's take a look at the costs. Our medical plan costs increase each year as hospitals and doctors charge more and as fees, prescriptions, tests, and other services get more expensive. When you add all of our healthcare together, you get the total cost of the medical plan. Because ensuring that you and your family have access to affordable healthcare options is a priority at Snyder's-Lance, each year, as a part of your total benefits package, the company covers the majority of this medical costs, about 75%. The remaining portion is shared by employees who enroll in the plan through their weekly payroll deductions and the copays, deductibles, and coinsurance that's paid when medical care is needed. While medical costs do rise each year, your payroll deduction for this plan will only increase by a small amount next year. See page 6 of the benefits guide for the standard rates for each plan option. And remember that it's not too late to reduce your medical premium by achieving silver, gold, or platinum status in the Health Improvement Plan. You have until November 30th, 2017 to finish logging your wellness activities for next year's discount. Premium incentives earned by November 30th will be honored for all of the 2018 plan year. You may pay more for medical coverage due to surcharges, which will each increase next year. The tobacco use surcharge for employees enrolled in the Snyder's-Lance medical plan will increase to $25 per week, and so will the spouse tobacco use surcharge. And the spouse other coverage surcharge will increase to $40 per week. These surcharges are applied based on your answers to questions asked during the open enrollment process. Be sure to answer the surcharge questions during open enrollment every year. Failure to do so will result in you being defaulted and paying them for the entire plan year. When choosing a plan and deciding whether or not to cover your spouse on the insurance, consider these premium discounts and surcharges. Another important item to consider when choosing between plans is the availability of a pre-tax health savings account with the Blue Options HSA plan. When you choose the Blue Options HSA medical plan, you can open a free Fidelity Health Savings account on the same netbenefits.com site that you use to view your 401k plan. Just log in and click the Open an HSA button to get started. Once your account is active, you'll be sent a welcome kit and an HSA Visa debit card that allows you to access the money in your account at the doctor, dentist, or pharmacy. HSAs are funded in two ways: through optional pre-tax payroll deductions you elect, and through a contribution from the company. The amount of money you can contribute on a pre-tax basis to your Fidelity HSA and how much Snyder's-Lance will put in on your behalf depends on if you have a single or a family HSA. If you have employee-only coverage on the Blue Options HSA medical plan, you're considered to have a single HSA, and Snyder's-Lance will put up to $500 per year into your account to get your savings started. If you cover yourself and a dependent on the medical plan, you have a family HSA, and Snyder's-Lance will contribute up to $1,000 a year. This company contribution goes in on a prorated per paycheck basis and does not start until your account is open. Because of this, be sure that your Fidelity HSA is open and active before the end of 2017. That way your company contribution can begin with your first paycheck in January. You can save for your healthcare expenses by putting in some of your own money too. You choose how much to add during open enrollment, and your contributions are deducted evenly on a pre-tax basis from your paychecks. Both your contribution and the company contribution are sent to Fidelity after each paycheck. You'll typically see the money in your account about 5 days after you get paid. Once the company contribution is in your account, it's yours to keep, even if you leave the company. The IRS limits the total amount that can go into an HSA each year. For a single HSA, the combined total of what the company and you put in cannot exceed $3,450. And for a family HSA, in 2018, it cannot exceed $6,900. The money in your HSA can be used as soon as it's deposited to pay for eligible health expenses using your HSA debit card. You can also choose to save your money up over time. Your HSA balance does not expire, and the interest you earn is not taxed, meaning that this account can be used as a pre-tax savings tool, much like your 401k. And as a bonus, once your balance meets a minimum threshold, also like your 401k, you can invest a portion of your money in Fidelity's investment funds. That gives you the potential to grow your money over time. And with Fidelity as the administrator, you can view and track your balance right alongside your other financial benefits in the Net Benefits portal. Consider this. While you may not spend a lot on healthcare today, chances are you will have more expenses as you get older. Starting your health savings account now is a smart move for your future, as you can build up savings to pay for expenses even into retirement. Because your contributions into your account are not taxed, the interest and earnings from investment are not taxed, and the money isn't taxed when you use it to pay for eligible expenses, these accounts are sometimes referred to as having a triple tax benefit. Whether the Blue Options HSA or the Blue Options PPO medical plan is better for you depends on your unique situation. Not all plans are right for all people, and the decision is yours to make. But do keep in mind that as plans change and your needs change, the option you selected in the past may or may not still be the right choice for you going forward. The medical plan is only one piece of your total benefits package, so let's take a look at your other options. You'll continue to have the option to open a healthcare FSA or a dependent care FSA to pay for eligible expenses in the 2018 plan year on a pre-tax basis. Be aware that if you open a healthcare FSA and enroll in the Blue Options HSA medical plan, your healthcare FSA will be marked as a limited purpose account. That means it can only be used for eligible dental and vision expenses. Medical claims submitted will be denied. In this case, you can open and use a Fidelity HSA for the medical expenses. These accounts can be great tax savings tools if you have eligible expenses. But know that participation is optional. When enrolling, first determine how much you think you will spend on eligible expenses next year, and set your contribution from there. Choose carefully. With both accounts, any unused money at the end of the plan year is forfeited. And after open enrollment closes, you cannot change or cancel your election. So be sure you enroll in the correct account type and set the right amount for your intended purposes. If you don't need one of these accounts, you can decline them during enrollment. You will continue to be able to choose between two MetLife dental plan options, the PDP Low and the PDP High plans. The per pay period costs are remaining exactly the same, and there are only two minor changes to how the plans will work. In 2018, crown replacement will be covered once every 120 months. And in 2018, the annual benefit maximum, that's the total amount that the plan will pay in claims per person per year, will now stretch a little further because annual cleanings and preventive exams no longer reduce the amount. That leaves the whole annual allowance for use on basic and major services like fillings and oral surgeries. You will also continue to have your choice between two VSP vision plans, the Signature Low and the Signature High plan. The plan design and the plan costs are remaining the same next year. Snyder's-Lance will continue to provide all benefits-eligible employees with basic life and accidental death and dismemberment coverage. And you can continue to purchase additional supplemental life and voluntary accidental death and dismemberment coverage for yourself and for your family at competitive group rates. Remember that if you apply to increase your supplemental life coverage, you'll be required to complete a health form after open enrollment closes before your coverage can be approved. When you're in the online benefits center, be sure to review the beneficiaries you have on file. It's important to keep this information up to date so that the right person is paid in the event of a claim. Your basic short and long-term disability coverage will continue. This important coverage is paid for by the company and costs you nothing. Now that we've covered the benefits that you'll see during open enrollment, let's talk about how to get enrolled. Open enrollment starts on Tuesday, November 7th and ends at midnight on Tuesday, November 21st. Log in to the Online Benefits Center at snackhip.com anytime during this period to complete your enrollment. And if you don't remember your username or password, you can reset them from the login page or call the technical support line for assistance. You can also use the single sign-on feature at sso.snyderslance.com to connect to the HIP site. Once you're logged in at snackhip.com, click on the blue Benefit Center button to link to the Benefit Center homepage. From there, you'll see an orange 2018 Enrollment Start Here button. Click on it to start the enrollment process. All eligible employees must log in, and when you're in this system, be sure to answer the tobacco and spouse other coverage questions, update your contact information, add or update the information on your eligible dependents, and verify your beneficiaries. You'll need to change or confirm elections on each of the benefit plans, including setting up or declining a 2018 FSA, and setting your annual contribution to your health savings account. And finally, when you're done, print your confirmation page. If there's a discrepancy between what you thought you enrolled in and what you get set up for, we'll ask for a copy of this page. So print it and keep it in a safe place. The whole enrollment process takes only about 10 minutes, and that's time well spent in ensuring that you have the coverage you need for you and your family in 2018. Do not wait until the last day to enroll. If you have questions or you need assistance enrolling, help may not be available, and there are no exceptions or extensions to the enrollment dates, so plan ahead and enroll early. The new benefits that you select between November 7th and 21st, or the plans that you're defaulted into if you take no action, will start on Sunday, January 1st. New premiums will begin with your first paycheck issued in 2018. Be sure that you're in the plans that you want for the entire 2018 plan year before enrollment closes on November 21st, because you won't be able to make any edits except in special cases where you experience a qualified life event. Similar to past years, if you don't log in and complete the enrollment process before open enrollment closes on November 21st, you'll keep most of the plans you have today, with some important exceptions. Your HSA contributions will stop, you'll miss out on flexible spending accounts next year, and depending on who you cover on your medical plan, the employee tobacco user surcharge, spouse tobacco user surcharge, and spouse other coverage surcharge may be defaulted and charged the entire year. It's in your best interest to log in and enroll, so don't let open enrollment pass by without completing the process. And remember, you must certify your tobacco user status every year during open enrollment. After you enroll, watch for important information in your home mailbox and your email inbox. Items like HSA enrollment instructions, and then once your account is open, your welcome kit and your debit card. If you're increasing your supplemental life, you'll need to complete that statement of health form and return it to Cigna. And look for information on 2018 wellness programs like the Tobacco Cessation Program or the new HIP program. If you enroll in new plans, be sure to watch for your new medical ID cards or your Health Equity FSA debit card. You'll only get new cards if you change plans or join new plans. So keep your current Fidelity HSA debit card, Health Equity FSA debit card, and hold on to your current medical ID card. Blue Cross Blue Shield will only send new cards if you change plan options or add someone to coverage. And remember that MetLife and VSP do not send out dental and vision ID cards. You can print them online or go paperless by using their smartphone apps to get your ID cards on the go. After you enroll, also look for information on the 2018 wellness programs offered to help you get healthier and feel your best. If you or your spouse use tobacco products, you're eligible for a free program to help you quit. You'll get telephonic coaching sessions and help obtaining free tools like nicotine gum and patches. Medical plan participants subject to a tobacco surcharge can call beginning December 1st and enroll in the program for the purposes of stopping the surcharge. Note that this year's program has a new deadline. Users must complete 5 calls in accordance with the program guidelines by May 31st, 2018 to be eligible to have 2018 surcharges stopped and reimbursed. If you wait and enroll late, or if you do not finish your 5 calls by this deadline, Your surcharges will continue for the entire 2018 plan year, and you will not be eligible for reimbursement, even if you finish the program at a later date. So look for information in the mail after open enrollment and get started as soon as December 1st for the 2018 cessation program. You'll soon see information on the new, simpler health improvement plan. Beginning December 1st, medical plan participants who complete 2 healthy activities in accordance with program guidelines can earn a cash reward. The new program only requires you to complete the confidential wellness assessment at snackhip.com by May 31st and have an in-person wellness exam with your primary care physician using your Blue Cross Blue Shield of North Carolina ID card by October 31st. If you successfully complete both activities by the deadlines, you'll be eligible for a $300 healthy reward payment after the program year closes. This new, easy-to-understand 2-step program replaces the current complex activity grid and the premium and taxable mall reward programs in the 2017 Health Improvement Plan. Don't worry, you'll be able to use any accrued mall rewards that you have through May 31st, 2018 to buy gift cards or merchandise. And any premium incentives that you earn in the 2017 program year will apply for all of 2018. So beginning December 1st, log in at snackhip.com and explore this new program. We hope that you choose to participate. We've now covered all the plans, and it's time for you to decide what to do with your benefits next year. You've got some great options, so use this annual open enrollment period to get the right coverage in place for you and your family. Read the benefits newsletter sent to your home, and refer to your 2018 benefits guide for plan details and costs. Your human resources team is here to answer any questions you may have and to help you enroll by November 21st at snackhip.com.